that's where we do the deep work. I think we do more macro crypto work than anybody else in the world, and I think our macro work is the best in the world as well. And we've done thousands of hours on this. And I know it sounds hubristic, but I honestly give this banana zone.
The Bitcoin market is now exhibiting signs of recovery after weeks of relentless carnage with only fleeting moments of respite. Experts are confident that this is the moment we have all been waiting for. The SEC's clearance for Bitcoin options listing and trading on Friday surpassed the euphoria that followed the Federal Reserve's announcement of a rate drop on Wednesday. Bitcoin bull and executive chairman of MRO Strategy, one of the first to react, Michael Saylor, said the SEC's approval will significantly speed up institutional use of Bitcoin. A few hours prior, Saylor posted another joyful piece of news on social media, referencing an article from Unchained Crypto that cited reliable claims that BNY Mellon will be the first bank to obtain the SEC exemption from SAB 121, the accounting rule that prohibits banks from holding Bitcoin. Raoul Pal, the CEO of Real Vision and a well-known macro analyst, argues that with all of these exciting developments in central banks preparing to start what many experts consider to be the largest money printing operation in history, the stage is now prepared for Bitcoin and other cryptocurrencies to take off. According to Pal, the Banana Zone might be just a few days away. Another important masterclass for the Banana Zone. For more videos like this, please subscribe to the channel like this one and enable post alerts.
FOMC, blah, 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 50 basis points, blah, 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 nobody cares. Markets are always unreadable around events like this. You need a day or two to settle down. I've been saying this for a long time. Inflation is falling. Rates were at 5.5%, they're now at 5%. Inflation, headline inflation is at 2.5%. Half the people on the internet is like, oh my God, inflation's so high, it's 2.5% and it's falling. In fact, I'm going to show you a chart. Nick, I'm just going to share a chart, which is it's the easiest chart in the world. This is the chart of CPI versus the large outbursts of inflation, the five largest from the 1940s and 1980s. This Mount Fuji pattern is so consistent, yet everybody bleats, oh, well, if they cut rates, they're going to bring inflation back. No, they're not. They never have. Inflation will come at the end of the cycle. This is so normal. Inflation is going to keep falling. It'll be below 2%. And guess what? I think rates are coming below 2%, and people don't understand this yet. And so I think rates will continue to be cut. The market doesn't understand this. Rates are part of financial conditions that should continue to improve. In fact, do I have a financial conditions chart on? I've stolen Julian's charts from our Exponential Age Asset Management investment committee meeting this morning. That one's basically the rate of change of interest rates versus the ISM survey. Don't tell Julian I'm doing this. He'll get pissed off because I'm using his charts. But our GMI model, it shows that ISM, the business cycle is all about to pick up. All the talk about recession and everything is just utter nonsense. We've actually got economic growth signposted everywhere whilst inflation is falling. So that's the big story. So the Fed, blah, 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 blah. But generally speaking, risk assets should be doing really well. And risk assets are doing really well because guess what? As I've talked about, bleated about, explained to you in the Everything Code is global liquidity. This is the time. They have to roll the debts. Global liquidity is going to go up. And hey presto, it's going up just like it did every other time. So that's global M2. We can use GMI weekly global liquidity, which is just central bank orientated. Less exciting yet. When we get to the Chinese, their assets, their balance sheet in white, that's cyclical. It will continue to grow. They will probably do a lot of quantitative easing. But generally speaking, overall, the GMI total liquidity index breaking out. Now, again, you people are watching this on YouTube, getting everything for free, drinking probably a Bud Light, probably eating Doritos, while the people on Real Vision are probably drinking champagne and eating toasted almonds from Valencia. This work that Julian does and I do is actually available for members on Real Vision. And if those of you who are on Real Vision watching this on the free, we love you. But honestly, and I'll talk about this in a bit, I can really help you. Julian can really help you to nail this cycle. The macro investing tool is part of the subscription. Please take the opportunity to use it. It will change your life when it comes to this kind of stuff. So
The Real Vision CEO claims that in a full-fledged cryptocurrency bull market, such as the one he believes we are about to enter, a little amount of money will be able to drive prices tremendously high with a minimum free float. In his video, Pal claims that one of SUI's main disadvantages is its low float token. A friend said on social media last month that in a bull market, low float, highly diluted value coins will outperform the market. Markets hate minimal float, according to Pal. Since supply is known, demand is the more crucial factor in the equation. If a token exhibits genuine demand growth even in the early stages, either from network activity or speculative interest, then demand will grow faster than supply for the time being and number will increase. IFDV tokens typically fall on the initial float by 70% as the market prices future unlocks, etc. Most unlocks do not see large selling events anyhow, growing throughout the cryptocurrency ecosystem as the summer and fall bull markets get underway. Alt-season tokens with increasing demand but limited supply because of low floats would rise asymmetrically in a bull market. Despite the widespread belief that tokens with network growth and investor interest should be avoided at all costs, Pal contends in his piece that these tokens might be the top performers over the next 18 months. SUI is on his radar, even though he doesn't mention names. Go back to the video.
just to show why it matters, this is the banana zone. I posted this on Twitter. Global M2, 10-week lead over Bitcoin. Do you need anything better than that? Oh, wait, I can give you something better than that. I can give you the GMI total liquidity, which is both private sector and state sector liquidity versus Bitcoin. It says the banana zone is here. That's the only thing I can think of, is that everything I look at says the banana zone is here. Bitcoin seasonality, election years, October, up only. Right? And these are big moves. Same in the Russell 2000. I'm not going to go through all of Julian's charts because that's unfair, and we're going to do it to the Real Vision RVIP group tomorrow. We've got an AMA there where we're going to really dig in to some of our stuff. Here's Bitcoin last year versus this year. I mean, really? And this is La La Land ETH last year versus this year. So, oh, and by the way, that's the straightforward Bitcoin pattern. I mean, everything I look at, every single thing shouts the banana zone. Now, I'm wearing my banana zone t-shirt because I think it's coming. I think it's coming in days or maybe a week. And before I said, well, maybe it's next month, maybe it's the month after, maybe it's this week, I don't know. I'm like, no. Julian and I in Global Macro Investor, which is the flagship research service. And if you haven't checked it out, go to globalmacroinvestor.com, have a look, see what we do from there. That's where we do the deep work. I think we do more macro crypto work than anybody else in the world. And I think our macro work is the best in the world as well. And we've done thousands of hours on this. And I know it sounds hubristic, but I honestly give this banana zone an 80-something% chance of happening almost immediately. Give it 2 weeks, within 2 weeks. And I know that sticking my neck out and wearing my banana zone t-shirt, I'm trying not to jinx the thing. But, as I've talked about, all of our hopes and dreams are in this. Mine too. Real Vision as a business. Almost everybody I speak to, I've been on the phone with a few, billionaire GMI subscribers, friends of mine. Everybody wants this to happen. Everyone needs this to happen because people are invested. Now, technology, there's a bunch of other ways of skinning this cat, but really people have been like this with high interest rates, a slow business cycle where ISM has been bumping along. And I know people like a lot of, people on Twitter are like, oh, well, my God, the markets are all-time high. What's everybody complaining about? Speak to real fucking people. When their mortgages are like that, their interest payments are like that, their credit card bills are like that. Speak to corporations who are trying to borrow money that aren't kind of, AAA rated tech companies that have no debt. All of this stuff. It has been very, very difficult for a while. Rates have been the highest they have for a very long time. The rate of change of interest rates was enormous. Inflation is now wildly below interest rates. So So real rates are ridiculously restrictive, and people feel it. People are not happy. People don't have personal expenditure abilities to do what they want, but it's coming. It's coming. The business cycle's changing. So all of you who run businesses, all of you who see the sluggishness of the cycle and wonder why the equity market's going to all-time highs and your business isn't yet, it's all going to come. Things are going to improve dramatically. The equity market's driven by liquidity. Your earnings, yours and mine, are driven by the business cycle. And that is just about to pick up. So cheers. Here's to a much, much better 18 months ahead.
In a recent report detailing the investment case for Bitcoin, BlackRock, the largest asset management firm in the world with over $10 trillion in assets under management, has subtly planned for a $35 trillion Federal Reserve dollar problem. As concerns increase, Global Macro forecasted that investors will diversify into Bitcoin to prevent a dollar collapse. Growing worries about US federal deficits and debt, both domestically and internationally, may make alternative reserve assets appealing as a hedge against potential currency events. Based on our interactions with clients, it seems that same dynamic is also occurring in other nations where there has been a notable buildup of debt. This accounts for a significant amount of the recent expansion of institutional interest in Bitcoin. Although there has been some short-term correlation between Bitcoin and riskier assets like stocks, its long-term fundamental drivers are very different. It needs to be approved by the CFTC and OCC before listing and trading, which should happen in a few weeks. Additionally, it is expected that the SEC would grant specific institutions one-on-one exclusions. The price of Bitcoin will be significantly impacted by all of these developments, which will raise institutional interest and demand. The market for cryptocurrencies and digital assets will be fascinating in 2025 and beyond. Thank you for watching.